and welcome to this episode of JMM Expert Insights. I'm Jane Morgan, and today I'm joined by the CEO of Manganese, Matthew James. This week, the company announced that it had entered into an offtake term sheet with US-based Wildcat Discovery Technologies for the sale of high-purity manganese product from the company's Wildcat Manganese project in the Czech Republic.
Hello, Jane. Nice to be here.
To start, can you please give us a bit of a brief overview of the recent offtake term sheet, which was signed with Wildcat Discovery Technologies, and most importantly, why this is a significant milestone for Manganese?
Yes, over the last few years, cell makers in North America have been looking for accessible long-term alternatives to China-based cathode active material production. That's why Wildcat's mission is to produce high-performance US-made cathode materials to enable widespread adoption of clean energy. The need to secure IRA-compliant high-quality manganese is critical for them. This term sheet covers offtake tonnage of high-purity manganese products from the JMM Manganese project that increase over the 7-year term, and the average annual tonnage represents a significant percentage of our annual high-purity manganese production. Our offtake contracts are required to underpin the debt finance for the Wildcat project. So for Manganese, securing this second term sheet contributes towards that goal. And as mentioned, it covers a significant portion of our production.
And so just a little bit more insight on the significance of the agreement with Wildcat, specific to Manganese's long-term growth strategy.
Yes, we are aware our shareholders have been waiting for news on offtake contracts, and we expect to have additional offtake news flow this year. As we build our offtake portfolio, we will be able to put together our project financing package to execute on our flagship project in the Czech Republic, which we view as the first step in building a multi-asset manganese company.
Thanks, Matt. So the agreement with Wildcat is described as non-binding and obviously contingent on the construction of their US plant. So what key milestones should be considered and what should be watching out for in terms of progression when it comes to where we currently are and toward the binding offtake agreement?
The term sheet is non-binding. However, we do anticipate moving forward with an offtake contract before the Wildcat plant is built. The parties intend to enter a binding offtake agreement, and I anticipate this will be required around or before the final investment decision for the Wildcat plant. Wildcat have engaged their engineering firm, they're on board, and they are in the final phases of designing the plant, and construction is scheduled to be complete in 2026.
What are the key operational challenges you foresee in meeting the quality and volume requirements stipulated in the term sheet with Wildcat? And secondly, how is Manganese preparing to address or preempt some of these challenges?
We are aware of the Wildcat required specifications, and we are very comfortable our product from the demonstration plant will have no problem in meeting the Wildcat specs. The material produced by the demonstration plant and tested by third-party labs is well within the required specifications. We are now preparing to send samples to Wildcat. Commercial deliveries will commence from the first production of our commercial plant. So there's no operational challenges that are anticipated in meeting the volumes required.
So Matt, how critical is a project like the Wildcat Manganese project in contributing to the Western battery value chain, especially when it comes to the growing demand for locally sourced materials that are required?
Yeah, the Wildcat Manganese project is the only fully integrated high-purity manganese project in Europe. It is essential to building a secure local source of supply for the EU. The plant will be capable of supplying 15 to 20% of the EU's forecast demand when it goes into production. North America has no high-purity manganese production to date, and our project may also meet part of the demand for European customers who have plants in North America, as well as domestic North American customers.
And could you please provide some context on the current trends in the battery minerals and materials markets, and possibly explain how this agreement with Wildcat could position Euro Manganese to capitalize on any of these trends?
As discussed in our recent quarterly report, there is a slowdown in growth in the EV market, with the global forecast for EV growth reduced to over 20% annually, down from more than 30% annually, still a very healthy growth rate. However, cathode active material and battery producers are adjusting their manufacturing plans, which is affecting end market demand. A number of automotive OEMs, CAM manufacturers, and battery producers are also reviewing their chemistries in search of reduced battery costs, the single most expensive part of an EV vehicle. Increased interest in LFP and hence LMFP and mid-nickel chemistries, which have a higher percentage of manganese, bodes well for the high purity manganese market. And Wildcat is focused on the production of nickel and cobalt-free cathode chemistries, which mean safer, cheaper, smaller, and more energy-dense batteries. High purity manganese plays a key role in Wildcat's strategy for North American LMFP production, and also for their new cathode chemistry under development, DRX. The term sheet is based on Wildcat's base case forecasts. So even though tonnages are significant for Euro Manganese, there is still also upside on those volumes.
Can you elaborate on the pricing mechanisms linked to market indicators and benchmarks that were described in the announcement?
There are limited price indices for high purity manganese products. The China-based high purity manganese sulfate index is a mixture of qualities and spot domestic to domestic trades, which the Shanghai Metal Exchange have stated represent only approximately 13% of the market in China. So it has many flaws, but it can provide directional movement. Specifics have yet to be agreed in the term in a full offtake agreement, but there is an understanding that these indices are useful to reflect how the market is moving, which may be applied to a pre-agreed benchmark pricing for Western products.
And so what does this agreement mean for Euro Manganese's competitive positioning within the high purity manganese sector in particular?
As our portfolio of offtake contracts continues to grow, it does strengthen our competitive position. Less material is available to be contracted elsewhere, and our production availability gets tight. So this agreement contributes to that tightening of our product availability.
So with Wildcat's significant backers, for example, Koch Industries, how do you see this agreement positioning Euro Manganese in the global battery materials supply chain and amongst other global leaders in this area?
Wildcat have high quality investors, including Koch Industries, Eastman Kodak, CBMM, the largest niobium miner in the world, as well as PE firms such as Fifth Wall. They have raised approximately $200 million to date. And with those type of investors, it gives us confidence that they'll be able to put the funding together for their plant.
What steps is Euro Manganese going to be taking in order to ensure that its products meet the regulatory requirements of the USA and the markets that Wildcat operates in?
The key regulatory requirement which we will meet relates to the recent clarification of the US Inflation Reduction Act. To qualify for the material-related part of the IRA subsidy, no manganese in a battery can originate from or be processed by a foreign entity of concern. Our product meets these requirements and is a key purchasing criteria for North American customers.
Given the geopolitical landscape we see and the emphasis on localizing supply chains, how important is this agreement in positioning Euro Manganese within the North American battery markets specifically?
Well, this agreement shows the US market player that we can supply the US operations of European firms and also domestic US firms that are non-foreign entity of concern status is important, and that we will look to build our presence in North America.
So what role do you see Euro Manganese playing in the global EV supply chain moving forward, particularly when it comes to Wildcat's plans to manufacture key battery materials in the US and their existing relationships with major automotive players?
Wildcat's focus on developing a portfolio of low-cost chemistries, making them nickel and cobalt free, and using significantly more manganese to achieve this is exactly what the market needs. As vehicles move into the mass adoption market, cost is the number one consideration for automotive OEMs. Wildcat has a joint development agreement with BMW. And Euro Manganese, we're excited to sign the term sheet to help Wildcat achieve their goals and to put another link in the growing EV supply chain.
So beyond this agreement with Wildcat, what are the next steps for Euro Manganese in expanding its offtake portfolio and moving forward?
So Euro Manganese has a number of active negotiations on additional offtake term sheets, with 2 now announced, Vercor and Wildcat. We have 7 more in negotiations to close out in 2024, recognizing they may not all come to fruition, but I am expecting additional offtake announcements in the remainder of the year.
Well, Matt, thanks so much for joining us on this JMM Expert Insights interview. We look forward to future updates.